Good evening, everyone. Joining me on this call is our Group CFO, Anindya, and thank you all for joining us today. The Indian economy continues to remain resilient with upward revision in the GDP growth estimates for FY24 by RBI, reflecting the consistent actions and initiatives of policymakers. The underlying momentum is visible with pickup in consumptions driven by the festive season, healthy growth in investment demand due to government-led capex cycle and real estate buoyancy. India's foreign exchange reserves and current account balances are well supported by higher FPI flows, service exports, and remittances. As the liquidity and interest rate environment evolves, we would continue to monitor these developments closely. At ICICI Bank, our strategic focus continues to be on growing our core operating profit less provisions, that is, profits before tax excluding treasury through a 360-degree customer-centric approach and by serving opportunities across ecosystems and micro markets. We continue to operate within our strategic framework to strengthen our franchise and expand our technology and digital offerings. Maintaining high standards of governance, deepening coverage, and enhancing delivering capabilities are our focus areas for risk-calibrated profitable growth. Our board has today approved the financial results of the bank for the quarter ended 31st December 2023. I would like to highlight some of the key numbers. First is the section on profit and loss, profit and capital. The core operating profit less provisions, that is profit before tax excluding treasury, grew by 23.4% year-on-year to 13,551 crore rupees in Q3 2024. Core operating profit grew by 10.3% year-on-year to 14,601 crore rupees in Q3 2024. Excluding dividend income from subsidiaries associates, core operating profit grew by 9.7% year-on-year in Q3 2024. Net interest income increased by 13.4% year-on-year to 18,678 crore rupees in Q3 2024. The net interest margin was 4.43% in Q3 2024 compared to 4.53% in Q2 2024 and 4.65% in Q3 2023. The net interest margin was 4.57% in 9M 2024. Fee income grew by 19.4% year-on-year to 5,313 crore rupees in Q3 2024. Provisions, excluding provisions for tax, was 1,050 crore rupees in Q3 2024. This includes 627 crore rupees on investments in AIS as per the recent RBI circular. The profit after tax grew by 23.6% year-on-year to 10,272 crore rupees in Q3 2024. The consolidated profit after tax grew by 25.7% year-on-year to 11,053 crore rupees in Q3 2024. The standalone ROE was 18.5% in Q3 2024. At December 31st, 2023, the bank had a net worth of over 2.3 lakh crore rupees, including profit for 9M 2024. CET ratio was 16.03% and total capital adequacy ratio was 16.7%. Moving on to deposit growth, the total period-end deposits increased by 18.7% year-on-year to 13,32,315 crore rupees at December 31st, 2023. Period-end term deposit increased by 31.2% year-on-year to 8,04,320 crore rupees at December 31st, 2023. Average current account deposits increased by 11.6% year-on-year. Average savings account deposits increased by 2.8% year-on-year. The bank opened 123 branches during Q3 2024, 653 branches in the last 12 months, and had a network of 6,371 branches and 17,037 ATMs and cash recycling machines at December 31st, 2023. The bank had about 1,41,000 employees at December 31st, 2023. Moving on to loan growth. The domestic loan portfolio grew by 18.8% year-on-year and 3.8% sequentially at December 31st, 2023. The retail loan portfolio grew by 21.4% year-on-year and 4.5% sequentially. Including non-fund outstanding, the retail loan portfolio was 46.4% of the total portfolio. The business banking portfolio grew by 31.9% year-on-year and 6.5% sequentially. The SME businesses comprising of borrowers with turnover of less than 250 crore rupees grew by 27.5% year-on-year and 6.7% sequentially. The rural portfolio grew by 18.2% year-on-year and 4.6% sequentially. Growth in the domestic corporate portfolio was 13.3% year-on-year and 2.9% sequentially at December 31st, 2023. 69.8% of the total loan portfolio, excluding retail and rural, was rated A- and above at December 31st, 2023. Moving on to our digital initiatives. Leveraging digital and technology across business is a key element of the strategy of growing the risk-calibrated core operating profit. We continue to see increasing adoption and usage of our digital platforms by our customers. There have been more than 1 crore activations in iMobile Pay by non-ICICI Bank account holders at December end 2023. The value of the bank's merchant acquiring transactions through UPI grew by 85.0% year-on-year to 20.7% sequentially Q3 2024. The bank had a market share of about 28.8% by value in the electronic toll collection through FASTag in Q3 2024, with 11.9% year-on-year growth in collections. The bank has created more than 20 industry-specific stacks which provide bespoke and purpose-based digital solutions to corporate clients and their ecosystems. The bank's trade online platform allows customers to perform most of their trade finance and foreign exchange transactions digitally. The bank's digital solutions integrate the import transactions lifecycle with bespoke solutions, providing frictionless experience to our clients and simplify customer journeys. About 72% of the trade transactions were done digitally in Q3 2024. The volume of transactions done through trade online platform in Q3 2024 grew by 26.2% year-on-year. We have further simplified cross-border remittance journeys with new enhancements. Smart IRM is a multi-party cross-border inward remittance solutions with virtual account architecture and enhanced security features and remittance reconciliations with payer identification. Smart ORM enables pre-vetting of outward remittance transactions to ensure error-free submission before booking foreign exchange deals. Islands, a retailing lending platform, currently enables for our mortgages being upgraded on an ongoing basis with new features such as integration with account aggregators, opening of instant paperless savings account for newly onboarded mortgage customers, and instant property valuation reports for select developers to provide enhanced customer experience and to serve the customer 360 degrees needs digitally. Moving on to asset quality. The net NPA ratio was 0.44% at December 31st, 2023, compared to 0.43% in September 30th, 2023, and 0.55% at December 31st, 2022. During Q3 2024, the net additions to gross NPAs, excluding write-offs and sales, were 363 crore rupees. The gross NPA additions was 5,714 crore rupees in Q3 2024. Recoveries and upgrades of NPAs, excluding write-offs and sale, were 5,351 crore rupees in Q3 2024. Gross NPAs written off were 1,389 crore rupees in Q3 2024. There was sale of NPAs worth 36 crore rupees in the current quarter. The provision coverage ratio on NPAs was 80.7% at December 31st, 2023. The total fund base outstanding to all borrowers under resolution as per various extent regulations declined to 3,318 crore rupees or 0.3% of total advances at December 31st, 2023 from 3,536 crore rupees at September 30th, 2023. The bank holds provisions amounting to 1,032 crore rupees against these borrowings under resolution as of December 31st, 2023. The loan and non-fund based outstanding to performing borrowers rated BB and below was 5,853 crore rupees at December 31st, 2023 compared to 4,789 crore rupees at September 30th, 2023. The total provisions during the quarter were 1,050 crore rupees, or 7.2% of the core operating profit and 0.36% of average advances. The bank continues to hold contingency provisions of 13,100 crore rupees at December 31st, 2023. Going forward, we will continue to operate within our strategic framework while focusing on micro markets and ecosystems. The principles of return of capital, fair to customer, fair to bank, and one bank, one team, one ROE will guide our operations. We focus on building a culture where every employee of the bank serves customers with humility and upholds the values of brand ICICI. We aim to be a trusted financial services provider of choice for our customers and deliver sustainable results to our shareholders. With this, I conclude my remarks, and I'll be happy to take your questions.
Thank you very much, sir. We will now begin the Q&A session with Mr. Batra and Mr. Banerjee. Anyone who wishes to ask a question may press star and one on their telephone. If you wish to remove yourself from the question queue, you may press star and two. Today's announcement is on the bank's financial performance. Hence, we would like to request you to ask questions related to that. Please write to the corporate communications team separately for any other queries. Due to time constraint, I request all of you to ask 2 questions at a time. If you have additional queries, you may join the queue again. Thank you. The first question is from the line of Ritu Singh from CNBC TV18. Please go ahead.
Good evening, Mr. Batra. Couple of questions. Your CASA ratio at about 39.4% in the quarter, and your deposits growing by less than 3% sequentially. We've been hearing from your peer banks about the kind of difficulties they're facing in garnering deposits because, customers are looking for higher yielding assets. What your sense there is, and if you see any problems in those funds, what your plans are to sort of increase the CASA share as well. Your CD ratio also is at 86%, and there have been reports that the regulator is uncomfortable with a high level, of course, not being defined. I was wondering if there was any communication from the regulator on this front, if you're looking to reduce this. And if I may add a question on the NPA additions have been higher in the quarter. Where were the additional NPAs from? Thank you.
Oh, thank you, Ritu. Lots of questions. On the period in CASA, I'll just mention the deposit growth for the banking system has increased by 13% and as of December 2023 and about 9.2% year on year compared to December 2022. The Q3 2024 total period and deposits for the bank grew by 18.7% and 2.9% sequentially. I think you have to look at the whole thing in totality. The period and CASA increased by 3.8% year on year and 0.1% sequentially. We will focus, as far as we are concerned, we are focusing on average CASA, which has increased by 5.3% year on year and about 0.2% sequentially. We continue to see strong traction and momentum in retail term deposits, resulting in a healthy growth in term deposits by 31.2% year on year. Yes, CASA, as far as CASA growth is concerned, so lower growth is a trend across banks. We would have to wait and see how CASA stands over the next year as we expect easing of monetary policy. Coming to your ratio questions on CD ratio. First of all, I think we have to look at CD ratio in the overall context of there are multiple liquidity ratios, as you are aware. There is CD ratio, there is LCR, there is net stable funding ratios, and they measure slightly different things, but they are broadly in line to ensure long-term liquidity as far as banks are concerned. Currently, both LCR and NSFR ratios for the standalone bank and on a consolidated basis are well above the minimum regulatory requirements. As far as CD ratio is concerned, the level of equity also has a direct bearing on the ratio, and any bank with a relatively high level of equity will have a higher CD ratio. From our perspective, we manage international CD ratios, liquidity for international and domestic operations specifically. So I'll focus my comments on the domestic side. We have been mobilizing retail deposits, and that is the primary source of funding. And as I did talk about, retail deposits financially for us during the quarter. We are also mobilizing wholesale liabilities, which includes infra bonds, refinance from SIDBI, NABARD, etc. Our CD ratio of domestic operations are generally stable. except during volatile periods like COVID and etc., and ranges in the mid-80s. And we are very comfortable at this point of time with the CD ratio that we have. Sorry. Moving on to, what was your question on?
The NPA addition, and you didn't really outline how you're looking to increase your deposit base from here on, apart from expectations of liquidity easing in the coming months.
Ritu, we don't give outlooks, but I think we continue to operate within a risk-calibrated framework, which we have been saying, and we like to have 360-degree approach for our customer perspective. Yes, deposits is an important part of it. We look at deposits in totality and cost of funds in totality, and we are sort of comfortable the way we are approaching the overall business.
Maybe just to add, our deposit growth has, and loan growth have been quite balanced, and we don't see any challenge in funding this level of loan growth. So, we don't see any constraints as such on the ability to garner deposits. The lower CASA growth is a kind of a systemic feature at this point in time, and as Sandeep said, we would have to see how that plays out.
The net addition to gross NPAs excluding write-offs are about 3.63 billion for Q3 compared to 1.16. The increase is primarily on account of seasonal NPAs and Kisan credit card portfolio and normalization of net NPAs in the retail portfolio. This is very much in expected lines. From our perspective, we look at all the 7 levers to determine profitability. Credit cost, loans and credit cost PPP are adjusted for chunky recoveries and one-off items like AIF. As I did mention in my call, we have made a provisions for AIF in line with RBI guidelines of about 627 crores.
Sorry, I didn't catch that. Because of what seasonality?
No. As you are aware, the rural business is cyclical, and there are peaks in the December quarter and in the December quarter. So if their increase is primarily in account of seasonal NPA additions in the Kisan credit card portfolio and some amount of normalization of NPAs on the retail side, overall, I think if you will see the overall NPA provision numbers, they are very comfortable.
Thank you.
Thank you. We will take the next question from the line of Vishwanath Nair from NDTV Profit. Please go ahead.
Hi, Mr. Batra. Couple of questions. First, on the capital adequacy ratio, about 146 basis points dip on a quarter-on-quarter basis. What is the reason behind that? And where is the 627 crore AIF provision showing up? Is it getting marked because you would have probably written back some provisions? Is that how we should understand this?
No, this 627 is the result of what RBI prescribed us for this quarter, and I think it aligns with that.
But the question is on the P&L, where does it show up?
It shows up in provisions, no? Our total provisions are about 10.5 billion. This includes that.
Would you have written back any provisions during the quarter, is my primary question? Because the number looks very small in comparison year on year. So if one item has taken 627 crore.
Yeah, we would have had recoveries and write-backs as well. Last year, as you know, we had made some contingency provisions, and we had also tightened some of our provisioning policies. So this factors in, some write-backs, but the benefit of those write-backs is substantially offset by the AIF.
Okay. And on the capital adequacy, sir?
No, the capital adequacy is, there's a marginal dip, which is not the numbers that you talked about. We have a capital adequacy of 16.03%, and that includes profits for the 9M against the 16.7%. As you are aware, RBI, changed the norms relating to certain segments of our assets, and this sort of largely reflects that.
Okay, but even if you were to look at the 9 months, I think there's a dip, no? Because I'm looking at the P&L, the table that you've given, it says 14.61 versus 16.26 on a quarter-on-quarter basis.
That one doesn't, I think, the numbers that you're talking about doesn't include the cumulative profit for the year, which can be done only at the end of the year. But effectively, if I include the profits for this period, the number is 16.03%.
Okay. And would you have taken any hit due to the change in risk weight by the regulator?
I did mention the fact that there has been a drop during the quarter from 16.7 to 16.43 is largely because of the change in risk weights.
So roughly 60 basis points is the hit you have taken back.
About 70 basis points, yes.
Got it. Okay, thank you.
Thank you. The next question is from the line of Ashish Agassi from PTI. Please go ahead.
Sir, what is the overall investment in AIF? Because has it been fully provided for, or how is it? Because there's certain categories where you need to provide.
Yeah, so, we would have provided most of it because most of the investment would have, fallen within those criteria. Maybe some very small amount which is unprovided.
And so will you continue with the AIF investments even after this move, or how is it? Or would you probably hit pause, or what's your outlook on this side of the business?
This was a very small portion of our overall portfolio. We will make an assessment. At this point of time, we have pretty much provided for in line with what RBI has required us to do.
Okay, sir. And so, second question, the BB and below exposure has gone up during this quarter. So I think 5,800 crores, I guess you mentioned. So, what's causing that, or is it some business calls being taken? How should we look at it, sir?
Briefings are periodically reviewed independently by our risk management team, and based on their view on the asset, they upgrade or downgrade. I think overall, even after this increase, the portfolio in relation to our total book is very small. It is less than 0.5% of the portfolio. So that much variation would happen every now and then as the rating exercises are periodically done.
Okay, so it's a fresh exposure taken for a lower rated?
No, it was an existing exposure whose rating got internal rating got downgraded.
Okay, sir. Okay, thank you so much.
Thank you. We have our next question from the line of Sachin Kumar from Financial Express. Please go ahead.
The bank's deposit, they have grown sequentially 2.9%.
Sorry to interrupt you. Can I request you to speak through the handset?
Yeah. Am I audible now? Am I audible?
Yes, go ahead.
Yeah. So bank's deposits, they have grown sequentially 2.9%. So going forward, do you see some sort of moderation, or do you expect it to grow more than this?
We will take. We have to grow in line with, in a pretty efficient fashion. As far as we are concerned, we are trying to improve our journeys from a customer point of view. We will be focused on increasing our deposit, both from a CASA and a retail deposit point of view. As far as we are concerned, as the numbers really talk about, our retail term deposits grew by a healthy over 30% during this period. We will see how it goes along. Of course, as we expect some easing of monetary policy during the course of the year. We will see how that stands about. It's largely a function of the environment at that point of time. So at this point of time, we are comfortable with the deposits that we are able to raise, and that's adequate to fund our assets.
Okay. And what is your expectation in terms of advance growth in advances in next quarters? Are you seeing some growth reviving with strong growth for advances?
I think we do not give any forward-looking guidance, and we are really focused on assessing risk risk and reward in every transaction. We operate within our risk tolerance. If there are opportunities across segments, we are happy to go there. At this point of time, the Indian economy seems to be doing well, and whatever falls within our risk-calibrated approach, we will be happy to grow the business.
Yeah. Your NIMs have contracted, so how do you see that?
So NIMs have contracted in line with what we have sort of forecasted. I mean, the sequential decline, as we have mentioned in the previous calls, just reflects the lagged impact of increase in term deposits over the last year on the cost of deposit. Overall, the NIM was in line with our expectations. For the year, we had said, and we still maintain, that the full year NIM is broadly going to be at the same level as FY 2023.
And you see the pressure on NIM just because of rising cost in deposit. Is it the case? What's the reason?
No, I did mention the decline in NIM reflects the lagged impact of increase in term deposit rates over the last 1 year, and that reflects in the cost of deposits. During the course of the year, we do expect that the FY24 NIMs will be at the same level at FY23.
Hi, Sachin. I'm afraid that we will not be able to take more than 2 questions at a time. Please rejoin the queue if you have further queries. Thank you. The next question is from the line of Abhijit Lele from Business Standard. Please go ahead.
Good afternoon. Could you throw some light on what has been the income from the treasury and comparison? Because we have seen certain hardening also during this third quarter.
So we had the treasury gain of about 123 crores compared to a loss of about 85 crores in the Q2. This was primarily due to decrease in GSEC yields. The treasury loss in the last quarter was primarily due to increase in GSEC yields. So this is in the normal course of business. And of course, during this quarter, we had some small equity gains as well.
Okay. The second query is about RBI changed the risk weights on the unsecured credit portfolio. So has there been a change in some policy of the way you have grown and how you will do that? That's the first question. And second is on what has been the growth or approach for the funding to the NBFCs? Because that's where also there has been these risk weights.
No, I did mention earlier that the CET ratio has come down during the quarter from 16.7 to about 16.03. It's very well capitalized, and this is largely an impact of the change in risk weight which was prescribed by RBI, and we have clearly implemented that. From NBFC's point of view, our outstandings to NBFCs has decreased from about 79,900 crores in the last quarter to about 74,000 crores in the current quarter, primarily due to repayments of certain public sector entities during the quarter. We have looked at our NBFC portfolio in terms of credit quality, and we are very comfortable with the quality of the book that we have built.
Now, my questions on the unsecured credit was not on the capital adequacy ratio. I'm saying the approach. Is there a change in approach that is reflecting the height which RBI is sounding to go slow or sober it down? What is your stance? Is there a change in that stance? That was my query.
Sorry, I missed that. We have built our portfolio on core principles of return of capital and harnessing our complete ecosystems. And we do take on note what RBI has commented on this, and we have looked at, we have assessed our portfolio, and we keep on refining our credit parameters and optimizing sourcing costs, which has resulted in a little bit of a lower disbursements during the quarter as compared to the previous quarter. So during this period, the PL portfolio sequentially grew by about 37% as compared to 40% year-on-year, as compared to 40% year-on-year, and about 6.4% sequentially during this quarter as opposed to 10.2%. You're right, there is a little bit of a moderation in the growth which has been happening, but we are comfortable with the quality of book that we have built. And all the portfolios that we have been able to build.
Sorry.
So I just want to repeat that the portfolio that we have built, we continue to track the portfolio. It's within our defined limits. We look at CIBIL scores, we look at our internal assessments, and based on this, we grant loans, and largely it is based on the profile of the customers, and we look at customers on a complete 360 basis.
Okay. I'm through with my queries. Thank you.
Thank you. We'll take the next question from the line of Joel Rebello from Economics Times. Please go ahead.
Sir, it will help if you give us an overview of what is the bank's AIF investments. I know the provision that was made, you all said that it is mostly for all. Just give us a perspective on how much it is, what is the outstanding right now?
No, we have pretty much provided the entire amount. I mean, the outstanding is about 627 crores.
Okay.
And we have made a provision of a very similar amount.
Okay. Okay, sir. Thank you. Thank you.
Thank you. We have our next question from the line of Preeti Singh from Bloomberg. Please go ahead.
Thank you. So I just wanted to know, your results are fantastic, but what do you see as a really big challenge in the next few quarters?
Sorry, I didn't.
There's a challenge in the next few quarters. Results have been fantastic. What do you see the challenge next few quarters?
Thank you, Preeti. We will continue to focus on our approach. Our approach has been consistent over the last 5 years. From a customer point of view, we have this principle called fair to customer, fair to bank. We will continue to focus on that. We would like to be the most trusted financial provider for our customers. From a risk point of view, I think India seems to be well positioned. The GDP numbers have sort of increased as per whatever forecast that has come out, or a latest forecast that has come out. We will continue to look at opportunities across all segments, whether it is corporate, retail, SMEs, business banking, rural, and there are opportunities across. And on a risk-calibrated basis, we will continue to serve our customers on a 360 basis.
So I wanted to check one of my last question really is around cyber security. Is that something, have you seen an uptick in financial fraud, or sort of how are you thinking about it, even as more and more people go digital?
No, I think it's an important area to focus on. As a bank, the safety and security of our customers is of paramount importance. We continue to strengthen our cyber security framework. And of course, it's important to never to let your guards down as far as this is concerned.
Okay, thank you.
Thank you. The next question is from the line of Falaknath Sayed from Deccan Chronicle. Please go ahead.
So, hi, I wanted to know if there'll be a slowdown in the unsecured book, given the regulations that have come. And secondly, can you give a breakup of how the retail book has grown, especially home loans?
Oh, look, Palak, I mean, given we continuously keep on assessing the risk of our customers, and I did mention we did some tightening of our portfolio. It's a continuous exercise, and since RBI specifically flagged it out, we have done a more of a specific assessment of the segment that we really want to operate in. And as you can see, there has been some moderation which has happened in the growth of the personal loan book. As far as the overall retail book is concerned, the overall retail loans grew by about 21%. Mortgages constitute about 60% of the retail books. Okay. Vehicle loans, which is both auto, two-wheelers and commercials, comprised of about 14%. Personal loans is 17%. Credit cards is about 7.5%, and there is a small amount of 2.5% in other categories. So that is broadly the composition of our retail portfolio of about 6.4 lakh.
But how have mortgages grown?
The mortgages have grown by about 15.9%, Palak.
And vehicle loans?
Vehicle loans have grown by 19.6%.
And personal loans around 3%, no? What is the number
I
that
said
you
37%.
30. Personal loans have grown by 37%.
Year on year, yes.
Year on year. Okay. Okay, sir. Thank you.
Thank you. We'll take the next question from the line of Jineet Parmar from Money Control. Please go ahead.
Yeah, Harsh Kumar this side from Money Control. Hi, sir. So I have a couple of questions. One is in terms of recovery part, sir, how much you are expecting in next Q? And in the line of the expansion plan, so is ICICI Bank also planning to expand its footprints in Ayodhya?
We already have a branch in Ayodhya. We have already a branch there. And more than one branch. So I'll give you the exact numbers separately, but we do certainly have one branch over there. On NPA's outlook, we do not really give a forecast on any financial dimensions. We will continue with our overall strategy and do expect things to pan out well.
Harsh, do you have any follow-up question?
No, thank you.
Thank you. The next question is from the line of Richard Fargos from the Informist. Please go ahead.
For giving me opportunity. Sir, your AIF investment, you have provided 6.27 billion rupees this quarter. So you got to hold any time to liquidate it because RBI circular came on December 19. So this quarter, will you consider liquidating it and reversing the provisions in a PNL, or will you carry forward to next fiscal also?
So, Richard, from an economic point of view, this is more an accounting entry we have to provide, and we have pretty much provided the entire amount of investment in AIF. Economically, it doesn't really matter too much. It should give us returns over a period of time. If there are opportunities at various points of time, we will consider liquidating it. I think we have made reasonably good investments, and we do expect to give them returns over a period of time. AIF, as you are aware, is over a longer period, and it is pretty small portion of our overall book.
So you're not hurried to exit it?
Not at all. Whenever we are taking decisions, we will largely look at economic benefits for our shareholders and not necessarily accounting benefits.
Okay. Thank you. Thank you, sir.
Thank you. The next question is from the line of Anshula Kayastha from the Hindu Business Line. Please go ahead.
Hi, sir. Good evening. Sir, you mentioned opportunities in the wholesale and corporate banking portfolio. Last quarter, you mentioned the CapEx is largely being led by PSUs and limited to certain pockets and sectors. Have you seen an improvement in this scenario, and which segments are you seeing opportunities in, especially in light of the revision in GDP?
Sorry, the revision in?
GDP estimate.
I'm sorry, I didn't get that, but our focus continues to be growing the portfolio within our risk and return thresholds while considering the opportunities at the overall corporate ecosystem. As I have mentioned earlier as well, we will continue to follow our 360-degree approach with an objective to cater to the entire banking and financial needs of our customer and the ecosystem with a very balanced risk and reward framework. Since you mentioned wholesale, we are seeing some amount of growth there. As you are aware, the current capex is largely being led by government and PSUs, and we do expect the private capex to be coming up in the due course. We continue to maintain active dialogues with all corporate customers, and wherever we see opportunities within our overall framework, we are happy to lend.
Okay, thank you.
Thank you. This brings the conference call to an end. On behalf of ICICI Bank, we thank you all for joining us. You may now disconnect your lines. Thank you again.
Thank you. Thank you, everyone.
Thank you.